Hi Forex traders, so let's talk about how I cut over 200 pips trading gold to the 11th of March 2025 during the London session. And you know what? The good thing was I called this trade setup in the mentorship community. I gave them a trade call and I said, let's buy gold with a stop loss of 2894.16 and the time was 7:33 a.m. You can see clearly this was my chart markup. So that was the trade setup, and take a look at what price action actually did. Price delivered into the targeted first take profit point for me. So today I'm going to be analyzing this trade setup and I'm going to show you guys how to go about taking a trade when you are trading gold. First thing we need to do is to know what the directional bias of this asset class that we're trading from a higher time frame perspective. Reason being that the higher time frame is the main driver of liquidity. Liquidity resides on the higher time frame, and when I'm talking about higher time frame, I'm specifically talking about the monthly, the weekly, and the daily time frame. These are the time frames you're looking to study the directional bias of the currency assets you are trading or the commodity assets that you're trading. Gold is a commodity asset. So if we are going to be trading gold, we need to know what gold is doing from a monthly time frame perspective, because that's where the draw liquidity is residing. So you can see clearly on the monthly time frame, gold is bullish. We've seen price action create expansion, retracement into that fair value gap. Price created expansion, and currently we see the monthly candles showing momentum to take out previous highs and respecting previous lows. You can see the month of February took out the high of the month of January and never went to the low of that month of January. And of course, this month of March, I'm expecting to see gold trade into the previous month's high because we are in a bullish market environment. Then on the weekly time frame, we need to also study and identify price action creating expansion and retracement legs in the direction of the order flow. So since we are bullish, I need to see price create expansions to the buy side and shallow retracements to the sell side. We need to see price do more of buying and just a few of selling. We need to see price create more momentum to the upside and smaller momentum to the downside because we are in a bullish market environment. Okay, so let's take a look at the weekly time frame. Sorry about my network. The weekly time frame, this is what we see. We see so this is a weekly time frame, and this is what we see. We see gold repriced into that fair value gap right there. Remember, expansion, I said more of bullish expansions, smaller sell retracement. So we see this guy retraced into that fair value on the weekly time frame. So we'll be looking to buy from the fair value into the next draw liquidity, which is the relative equal highs right there. On the daily time frame, we're going to be studying market structure. We need to trade in the direction of structure if we're going to be buying gold. So this is the daily time frame, and what we see is price action trading into that weekly fair value and created that bullish displacement. You can see clearly price action formed a swing low within the weekly fair value, and swing lows are rejection patterns. They are reversal patterns that when we see, it lets us know that price is about to buy or about to sell when we see a swing high. So price created the swing low, created bullish order block, that expansion to the upside, and we saw price action created a tiny fair value gap by the left here that was violated. So that fair value gap that was violated here is literally resistance turn support. Price violated it, and we traded back into that fair value, confluencing with the bullish order block right there. Okay, then today we started to see price action. So this was exactly where I saw price had traded into this guy and was looking like it wants to buy. So I knew we're in a bullish market and the setup should be ready on the 1 hour time frame, not the daily, the 1 hour time frame. On the 1 hour time frame, I quickly checked for the 1 hour to look for shifting market structure bullish on the 1 hour time frame. That's going to confirm to me that we're ready to start buying gold. So on the 1 hour, I simply identified a change in market structure or change of character or market structure shift. That's what it's called. So look at what we see here. We see gold created shift in market structure, but I'm specifically focusing on the candle with the largest body right there. Most of you are going to be focusing with this candle below, but that's not the right way to identify shift in market structure. So what happened was price action created that failure swing right there, and we saw a shift in market structure bullish right here. We saw a shift in market structure bullish, but again, this is a bullish order block. Why I'm not using this last sell candle is because this is the candle with the largest body. This is the candle with the largest body. And remember, when treating or dealing with order blocks, we pay attention to the candle with the largest body. Again, at the same time, I see price action creating one of our favorite entry signature, the institutional order flow entry drill, the fair value gap right here by the left and by the right, and the fair value gap by the left. You see the gap by the left, the gap by the right. This is institutional order flow entry drill. So if I had seen this earlier, I'll be buying gold right at the low of the fair value there with my stop loss right here. This is where I would have been buying gold if I had seen this earlier. But I mean, this again happened before I got to see price. So immediately I came to the chart, I was looking for confirmation, and what I saw at the time I took the trade was that I saw price created a bullish order block after trading into that fair value, and we have a bullish candle that closed above the last sell candle. Already confirms we're about to start buying, that the buy setup was ready. So all I needed to do was to anticipate price to trade into the bullish order block right there, and that would mean a buy for me into the next. So I just outlined the two candles there, the two sell candles there as the bullish order block. Immediately price traded into that level. I called the buy on gold and I said, let us buy gold with our stop loss just below that candle there. And the drawn liquidity, of course, will mean the old highs, the relative equal highs and the old highs there. And guess what? This is how we were able to get about 200 pips just using this simple explanation and simple trading concept. Over 2,000 points was what we got. On the 15 minutes time frame, this would be more clearer to you. You would see how price created the entry signature. So after price traded into that fair value, we had a confirmatory shift of market structure bullish. Price took out the low there. Okay, price took out the low here and created shift of market structure bullish. Price traded back into the bullish breaker right there with the fair value right there. So the fair value gap at the bullish breaker will be the entry point. So the entry will have been still the same right there, would have been the entry. And this was how we cut over 150 pips trading gold today. My friends, don't forget to click the subscription button, like the video, turn off your notification bell so you stay updated every time I post a video. And if you're looking to join me for one-on-one mentorship, just check the link on the description of the video, reach out to my personal assistant, and they're going to sign you up for one-on-one mentorship. I hope you learned something in today's lesson. Until next time, I wish you good luck, good trading, stay safe.